Greetings, members one and all of the Salivation Nation. Gold and silver say that inflation is transitory unless... Are you on this edge of your seat? Well, stay tuned and we'll find out. Let's explore! Indeed, gold and silver do speak very loudly, the markets that is, and they're sending us a message. Right now, they're not so sure about inflation. Maybe they agree with the Fed and everybody else and the mainstream media that inflation is just transitory. But let's take a look and see. Here's an article from Market Watch, which is considered a mainstream source, but nonetheless, we're going to look at this and see exactly what they're talking about here. Gold prices end lower after back-to-back session gains is the market report for today. Gold futures posted their first loss in 3 sessions on Wednesday, giving back almost all of the Tuesday's gains that lifted prices to their highest settlement in nearly 2 weeks. And this is on the back of U.S. inflation data on Tuesday proved to be supportive for prices of precious metals, lifting gold futures to their highest finish since early September. As the U.S. dollar slipped, the consumer price index climbed another 0.3% in August compared with a rise of 0.5% in July, the government said. Taper uncertainty is the single most important factor for gold. And until we don't get any clarity on this, gold prices are likely to remain in a consolidation zone. This is Naeem Aslam, chief market analyst at AvaTrade, as it told Market Watch. So that is that factor. We're not sure what the Fed's going to do, tapering or not. My guess is they're not going to taper. But looking at economic data, it is very clear that the Federal Reserve doesn't have too much pressure to show an aggressive stance in their meeting next week. However, traders still believe that tapering of monthly bond purchases is on the table for this year. Although I tend to doubt it. There's still a lot of uncertainty, especially with the pandemic and the like, or at least the market's reaction to it. And I want to separate that because I don't want to get a debate about that. It's about how the market is interpreting news of all sorts, different styles, different things, and that is certainly front and center these days. So the single most important event for the gold price now is next week's meeting, and until then, gold prices are likely to continue their whipsaw movement, said Aslam, but that's not what is going to determine whether inflation is transitory or not. We'll get to that momentarily. By the way, if you enjoy videos like this, I do post daily content. I like to cover the news. Then I hope you will consider gently pressing the thumbs up button. I don't want you to smash it because I need it again so that it can be available for you to thumb up the next video that comes after this. See, I like to think ahead. And also, if you haven't subscribed, I encourage you to do that because most views actually come from the unsubscribed. And not that I'm partially against the unsubscribed. You can subscribe or not. It's your choice. There would be no subscription mandates on this channel, that's for sure. But I just encourage you to do so just as a courtesy. Nonetheless, December gold fell 0.68%. We'll take a look at those numbers here momentarily because this article, they're kind of out of date right now. And silver as well, too, but they're both down. The 2021 rise in inflation is a long way off the 1970s level. That's right. And there's where it is. And what is some of the catalysts of that? Is going global as energy prices soar. That's right. On top of an already troubled supply chain system, which we're trying to recover out of, but you just can't snap and turn on an economy like that. It takes a little while, and especially when we have hiccups in the economy with these cases that are starting to creep up as well, that's going to put a damper on things. But energy prices are going up too, and gold isn't responding to it yet, said Adrian Ash, who is a director of research at Bullion Vault. So that is what could be. Inflation could be transitory unless energy prices soar. And it's kind of looking like that's starting to happen. I know just in the last few days, gas has gone up in my area here. I do want to add as well that the Federal Reserve has forecast out inflation falling to about 4% in due course. I don't remember the exact numbers, but when you think about that, that movement backwards, even if they're right, they're saying it's transitory, in other words, above 5%, and it moves back to 4%. To me, that's still a long time of inflation that's more than double, or is double what their target was before the pandemic. So when you keep things in perspective, it's a matter of semantics and how they translate the numbers. Of course, the Federal Reserve has been much less transparent in how they report data, and most people believe that these numbers that they give us for inflation are very conservative. In other words, it's much higher than it is. But something to think about for sure when you're considering precious metals, by the way, as a way to protect against such actions and maybe even such deception in how they report the numbers. It's clear that for now the precious metal market still agrees with central bankers that this spike in inflation is transitory. Now, there you go. The precious metal markets believes with the central bankers, that includes the Federal Reserve and the European Central Bank, that inflation is transitory. However, if this energy scramble continues and a winter fuel crisis takes inflation higher again, gold at today's $1,800 level could look cheap in hindsight. Indeed, I tend to agree with that analysis. We'll see what happens. And the thing is, winter fuel crisis, more and more people at home. Now that's what's going to kind of drive some things. Working from home, being at home, which means they're probably not going to set their thermostats back. More energy use at home, and which is going to put a pressure on the supply chains in that regard. And we'll see what happens. But fascinating kind of analysis there, and I tend to agree with it. But we can see here that as of today, well, we're seeing kind of a reversal of what we saw in previous time. We looked at the precious metal prices. Gold and silver are both down slightly. Gold now under $1,800 an ounce for the ask price at $1,794.50, 1794, which is also the first year that we had a silver dollar in the United States of America after the Mint Act of April the 2nd, 1792. Silver is now below $24 an ounce to $23.91 an ounce for the ask price, down 3 cents, 0.13% drop. It didn't drop as much as gold did. That leaves us with the gold to silver ratio at 75.33. Still much higher than many of us think. Silver, I believe, still has some headroom given its volatility to perform and maybe get closer in that ratio. Maybe not to numbers many of us think that should be, like below 50 to 1, but maybe in the 60s again, like what we saw before. But look at the platinum group metals. They are normalizing. I call this a normalization for their pretty big crashes that we talked about in yesterday's video. They did crash hard, and they're snapping back to some semblance of reality. Yea, though platinum is still well below $1,000 an ounce. It is now at $948 in the ask price, and palladium is barely hanging on to $2,000 in the ask price, and the bid price it is actually below $2,000. It's $1,938. Rhodium is up $300, a first climb in a while, to now barely hanging on to, well, it's still not quite hit $10,000 in the bid price yet. But there it is. Fascinating news here of today. Gold and silver doing its thing, as it does always. And it really speaks volumes when the markets move and gold and silver are showing their true colors. Gold and silver. That's right. They always have and they always will. What you see and what you hold is what you get. And believe you me, holding is a great thing in terms of the physical gold and silver. You know what they say, if you don't hold it, you don't truly own it. Now, there is a level of ownership if you can access the leverage of the derivative markets and to be able to transfer it to a physical state. But nonetheless, I believe that even if you do want to dabble in those worlds, in the world of the ETFs, the markets, it's good to have a little bit of that physical too. as a representation of what you're holding digitally. It's something to think about. So there is the news for today. Let me know what your thoughts are. I would like to extend a multitude of gratitude to you all for taking the time to watch, and to encourage you to please rate, share, snap to it, and subscribe.